Imagine yourself at a crossroads where the price of Tesla's shares is going against what you are choosing to do with your money. Is that something you ought to buy? Do you think you should hold off? We'll explain the Tesla stock issue to you in this exciting episode. We'll break down the essential components, progressive strategies, and enticing chances that could impact your investing journey. By the time this film closes, we want to have helped you make a decision. Kindly don't forget to click the subscribe and like buttons. Firstly, welcome to Tesla Stock News, and let's get this video started. Without a doubt, one of the most discussed and closely followed equities on the stock market is Tesla. The stock price of Tesla has experienced incredible spikes at times because of its rapid ascent and vast possibilities in the future. Even after a significant decline that saw its share price more than drop last year, many investors are still unsure if it's an expensive purchase. Several analysts have been keeping a careful eye on Tesla's potential outside of the electric vehicle business as the company enters new markets. Giving investors a clear image of the company's future through these appraisals should facilitate their decision to buy stock. Even before the stock market crash of the previous year, Tesla's shares had already risen much above its operational performance. The opportunity to partner with the industry leader in a sector with massive development potential drew investors in. The market for electric vehicles grew quickly, and years of steady global growth are predicted. EV startups and established automakers both threatened Tesla's dominance, but the company was able to maintain it. Thus, despite a slight dip in Tesla's massive valuation, which peaked at $1.2 trillion in late 2021, the company has demonstrated that it is capable of running a very profitable business. Tesla has proven that it is deserving of investors' initial enthusiasm. Despite spending more than $2 billion on capital projects, the company generated over $1 billion in free cash flow in just the second quarter. Even so, the stock is still pricey in relation to the company's current financial situation. With a high price-to-earnings ratio of almost 80, it is valued at a recent market capitalization of $865 billion. This suggests that in addition to continuing to expand its already profitable EV and emerging energy areas, investors are also anticipating income from other sources. Dan Ives of Wedbush has conducted an analysis looking into the potential applications of Tesla's supercharger network. According to Ives' projections, by 2030, the number of rival companies who strike agreements with Tesla to utilize its network of charging stations may generate between $1 billion and $2 billion in revenue every year. In a related development, well-known Morgan Stanley auto analyst Adam Jonas updated his estimates for Tesla based on the company's AI capabilities. In an attempt to attain autonomy, Tesla has developed a state-of-the-art supercomputing architecture, according to Jonas' study, which Barron's shared. With a $1 trillion total addressable market, this design may provide Tesla an advantage over rivals. It also pushes the frontiers of tailored silicon. Consequently, Jonas raised his company's estimated price of $250 to $400 for the shares. Although these projections are clearly optimistic, investors should nevertheless view them with some suspicion. Tesla's AI computing technology, Dojo, is a prime example. Elon Musk revealed during a second quarter conference call that the company plans to spend more than $1 billion collecting data for Dojo's further growth and supercomputer training over the course of the next year. Whether you invest in Tesla stock at these current levels primarily relies on how you view analyst projections, Elon Musk's vision for autonomous vehicles, and the potential for Tesla to grow its software services. While the advancement of artificial intelligence technology suggests that autonomous vehicles could eventually be used, Elon Musk is bullish about the possibility of Tesla cars being used as ride-sharing robo-taxis in the future. If you believe this will happen and consider the value of Tesla's charging plug being the industry standard in North America, then buying the company at current levels makes sense. However, if you prefer to make a less educated prediction, you might base your decision on what is currently known. Tesla has a robust core business and keeps outperforming its rivals. The company intends to increase EV production this year at a rate of over 50% each year. Tesla's August car deliveries rose by 99.3%, even in the very competitive Chinese market. Despite this, given its potential for success in a variety of industries beyond the EV sector, the stock's valuation has skyrocketed. Consequently, your belief in Tesla's future endeavors in the next years should have an impact on your decision to invest in the company rather than solely depending on current EV business performance. Possessing a variety of these stocks is advantageous due to diversification. It comprises Spang and Li Auto, which has the potential to become both China's and the world's Tesla. The electric car market is expected to increase from 14% to 30%, offering investors in the right companies tremendous development potential. Plans by Tesla to build a larger factory in Germany than those of VW and BMW suggest that auto sales are both highly possible and in high demand. Considering the recent volatility of Tesla's stock, doubt may creep in. Investors often chase stocks with strong performance potential, especially while they're still profitable. So the question is it wise to buy Tesla stock at this time? In this case, the investor has the last word. Nevertheless, an assessment of Tesla's potential and stock price suggests that the company is still inexpensive. Investing in Tesla shares now could yield significant financial rewards. The current price of Tesla's stock undervalues the company's growth potential, and the story is far from over. It was evident from examining the call and result statement that the EV market was putting volume and accessibility ahead of profit margins and other factors like tax credits and incentives. Tesla wants to gain a competitive advantage by making more cars at a lower cost, while its competitors are still catching up. Tesla continues to develop new goods, such as the Cybertruck, to meet consumer demand. Thanks to its leadership in the global battery EV market, strong sales growth, and exceptional earnings per share performance in the second quarter, Tesla is in a strong position. It appears likely that analyst pricing expectations for Tesla will be reached, if not surpassed. Based on our analysis, Tesla could be a wise purchase at these levels right now. Whether or not to invest in Tesla at this time depends on your perception of the company's potential, your level of confidence in its strategy, and your belief in its growth story. Tesla is an appealing alternative for investors looking to profit from the future expansion of electric autos because of its ingenuity and persistence. For example, Cathie Wood, the CEO of ARK Invest, has shown her belief in the company's potential for future growth by establishing an optimistic price target of $2,700 for Tesla shares by 2027. In a similar vein, Wall Street analysts estimated that Tesla would surpass expectations in terms of financial performance in 2022, bringing in an additional $84.0 billion in revenue and $12.46 in adjusted earnings per share. It is believed that Tesla made a smart move by expanding its lineup to include more competitively priced models in an effort to appeal to a larger spectrum of customers. Tesla has expanded its product line to include pickup trucks and tiny automobiles, allowing it to fill a number of market niches. Cathie Wood's prediction on Tesla's potential robotaxi startup has garnered significant attention. In the long run, she believes this project will have a major positive impact on Tesla's profits and enterprise value. Tesla's autopilot technology is continually developing, despite Elon Musk's ambitious timeline for fully autonomous driving experiencing obstacles. With millions of vehicles on the road that are outfitted with autopilot, Tesla collects vital information for its algorithms, which it hopes to utilize in the future to operate autonomous vehicles. Because of its continuous development, Tesla is well positioned to benefit from the growing autonomous driving industry. The idea of a time when Tesla vehicles could be able to function as self-driving taxis and generate revenue for their owners is fascinating. Notable businessman Kevin O'Leary understands Tesla's unique position as both an automobile and a data company. Tesla's autopilot and fully autonomous capabilities give it an advantage over competitors in the autonomous driving space. Tesla needs to invest in research and development, data collection, and continuous software updates in order to move toward fully autonomous driving. Kevin O'Leary's view of Tesla as a data firm highlights another facet of the company's competitive advantage. Modern sensors and cameras installed in Tesla vehicles continuously collect data on driving behaviors, traffic patterns, and other subjects. This very useful data is used to train the machine.